schedule maintenance ಅಂತ ಬರ್ತಾ ಇದೆಯಲ್ಲ ಈ ಸೈಟಿಗೆ ಐ ಆಮ್ ನಾಟ್ ಏಬಲ್ ಟು ಲಾಗ್ ಇನ್.
ಏನೋ ಅಪ್ಡೇಟ್ ಮಾಡ್ತಾ ಇದ್ದಾರೆ ಅಷ್ಟೇ. ಆದ್ರೆ ಯು ಡೋಂಟ್ ನೀಡ್ ಟು ಲಾಗ್ ಇನ್ ಟು ದಟ್ ಸೈಟ್. ಯು ಕ್ಯಾನ್ ಡೈರೆಕ್ಟ್ಲಿ ಲಾಗ್ ಇನ್ ಟು ಟ್ರೇಡಿಂಗ್ ವ್ಯೂ.
ಟ್ರೇಡಿಂಗ್ ವ್ಯೂನಾ? ಲೆಟ್ಸ್ ಟೇಕ್ ದಟ್ ಒಂದು ನಿಮಿಷ ಮಾಡ್ಬಿಡೋಣ ಲೈಕ್.
Okay, but now markets is closed. So not fun. But okay, can try logging.
Yeah.
We'll do that at the end. Let
Okay.
me just finish this.
Yeah.
ಹಾ
Sure.
Vinay is like that teacher I remember. He would
Okay, all right. So since we just traded a lot of high impact news, I thought it makes it more sense to go through this slide again. Because till now it was all theory, right? So, um, so basically, it's basically the three: NFP, CPI, and FOMC. Okay, there's actually a fourth one which was recently added, which is the Jackson Hole Symposium. So all happened in the last 3 to 4 weeks. Okay, so the FOMC and Jackson Hole is a little. You just need to look at the calendar, and when it comes up, then you know that's going to happen. But otherwise, NFP and CPI is a fixed time, fixed date and time. Okay, so this is what happens every month. Okay, so at least you can look forward to these two events quite regularly. Okay, the idea is that these are the worst weeks to trade typically. Okay. So because they want to create liquidity and they want to make sure that, if there's any liquidity in the market, they just want to make sure that everything is taken out. Okay. So that's exactly what happened, right? If you saw all the huge week, they just brought the whole thing down in during FOMC. Again they took it up, again in CPI they went up and down, and then finally even on FOMC they took it up and down. But the thing is, these events create the range which will last at least for some time. Okay, the highs and the lows that are created because of these events, okay, they create the bigger dealing range in which price will actually keep moving for quite a while. Okay, so that is important to understand. That is one of the reasons why you look forward to seeing what they try to do during these events. Okay, and so yeah, most of the times what I've seen is whenever these events happen, they also end up, you know, revisiting those highs and lows quite often. Okay. So what I meant is this was CPI. Okay. So this is a low. This is CPI low. This will get revisited. Okay. Most of the times. This is NFP low. Okay. This was FOMC. If you go back through time, you will see that these will always get revisited whenever it goes up and down, right? These tend to be magnets for price because they've done a lot of things. A lot of people would have taken liquidity. A lot of people would have tried to play this. They would have held it and say, hey, I bought at the low and things like that. So expecting a move up, a lot of people would have bought around here. Okay. So they will want to try and run it out. So the best thing that will happen is that they'll after some time they will come, they'll use some other event, come and take out these lows. So you can expect these lows to be run out. Okay, they can even come down here, but then this was anyway the bigger retracement that happened recently, right? So they may not come back here, but for sure they'll try and come back here. Okay, or if not anything, they will come back to whatever gaps are there in and around this area. For sure they will come back here. For example, there is this 4-hour gap here. I don't know on the daily if we have gaps here.
But based on historical data, what is the frequency in terms of time when they come back? Or it is
There's nothing like that. They'll come back when they want to come back.
okay.
Okay. So all of these are here, right? They're all newly created daily fair value gaps.
So how is this kind of helpful? Because if
Because you know that it's going to come back. So you don't need to be scared when they actually do that because you know that they need to take this liquidity. So when they come here to take that liquidity, you can actually position yourself to take on, larger investments and those kind of things, your swing trades and things like that. You can look forward to these areas and you can say, no, let price come back here. Then I will take my swing trade.
okay. And then the other question is like when you talk about swing trade,
Hmm.
options might not work because
Yeah,
premium would
yeah,
go.
yeah.
So it is only stocks.
Hmm. Yes.
Okay.
Meaning you can do, meaning even options, you can take a yearly option and things like that, right? But
But
then you don't, meaning my personal opinion is that taking long dated options is not useful because they're
okay.
quite expensive. The premium is quite expensive.
Okay. So
At least when I looked at it, that's what I felt.
yeah,
Plus, you can never predict a year from now what is going to happen,
yeah,
right? So
perfect.
you're better off just investing regularly. You invest in whatever SPY or something like that. It makes much more sense than trying to do. I think short term you can try and do options.
No, no. My question, yeah, that's clear. My
Hmm.
question is, so futures with prop accounts, it would not work.
No, it does
Uh,
not.
options premium is very expensive. That's
Hmm.
true.
Hmm.
So now let's say with the stock,
Hmm.
we want to kind of do swing trade with stocks.
Hmm.
So we buy in stock
Hmm.
and then we kind of see when it has gone towards the premium and then we sell it off. Is that what
Yes,
you're referring?
kind of. Yeah, yeah.
Okay.
And you can use this as a basis because if you see the market move in a certain direction,
Hmm.
okay, the next time it starts coming down here, yeah, you can think, meaning ideally you should have bought Nvidia here.
Hmm.
Okay,
When it-
somewhere around here, if you had bought Nvidia, you would have stayed and you would have made a little money along the way.
hmm.
Or even if you had bought SPY here, right? It's a pretty good move. Almost how many points? Uh, 480 to almost 580.
Hmm.
100,
100 points.
around 10 points on SPY.
Oh, 100 is equivalent to 10, is it?
Yeah, roughly. I can open up SPY. We can check quickly.
Okay. So $10
Hmm.
or $100,
No, no, it's more. It's around $30.
$30. Okay.
Yeah, sorry. It was 480. Yeah, 400. 400 by 10. Yeah,
Okay.
40.
Okay.
Roughly 40. Yeah.
$40. Okay.
Yeah.
Yeah.
So you would have got a nice premium. Yeah.
Hmm.
Meaning, if you look at it in a way,
Hmm.
if you wanted to play options, right, this would have been actually a good way to play options because you knew that the NFP they brought it down,
Hmm.
right, and you knew that they were the reason they brought it down was because FOMC they were going to reduce the rates. So that's the reason this whole move happened,
Hmm.
right? So you could have bought it here, said 2 week premium or 3 weeks thing, okay, and then you could have stayed with it, and then it would have gone and hit it,
Hmm.
and you would have made money. So that's more like what I call position trading, not really swing trading. It's a way of swing trading.
Oh,
It is a kind of, but a very short term swing trade.
so a prop account is only like daily trading, right?
Yeah, you can't do swing trading in proper funds. That's the only sad part. Problem is if they allow that, then you'll make a lot of money. So they don't allow it.
Hmm.
And real accounts, it is risky also, right? Playing with that much amount. Like, where will you spend $19,000 for one future?
Yeah.
Okay.
Okay. So
Oh, sorry. Before we move forward, like,
mm,
uh, say if I cannot buy option,
mm.
there is this. One second. I was just reading about it. One second. Let's say if I cannot buy QQQ for
Hmm.
options,
Hmm.
there is something called as Pro Shares. Pro
Hmm.
Shares
Right.
Ultra,
Yeah. Yeah.
uh,
Something
which
like that.
which kind of needs to be again done with day trading. How beneficial are those, or should I reserve that for questions at the last?
I have no idea about that, to be honest.
Oh,
Many I heard of it, but I don't have that much experience with that.
okay. Okay.
Okay.
Yeah, this is clear. Okay.
Oh, all right.
Mm.
So the other thing that I wanted to talk to you about was TGIF. This is also an interesting profile. Okay. So basically TGIF. The idea is that whenever you see a huge run, okay, during the week, okay, you expect that on Friday you can expect a reversal. Okay. This does happen most of the time, but recently sometimes I've seen that even on Friday it just keeps going on and on and on. But then this week at least it looked like it worked.
Yeah,
Okay.
it came down, right?
Yeah. Okay. So basically, Monday low of the week or
Mm,
Tuesday low of the week is typically what you can expect, and then you will see that it keeps going higher and higher and higher. Then on
Mm.
Friday they take a breather and come back down.
mm.
Okay. So one of the you know things that you need to see is that most of the times every candle has a wick, right? And these wicks are essentially manipulation of the range, right? So if you look at it, so the idea is that at some point you will make a low of the week on the weekly candle, okay, and then you will cross the open, and then you start going in opposite direction, go till the high on Friday or Thursday, and then you move back and close a little lower on Friday. And the key thing is when this happens, you normally or many lots of times you'll see that it closes down in roughly 20 to 30% of the overall range.
Mm.
Okay. So you can expect that price will stay within that range. For example, this was this week. Okay. This was Monday. Okay. Monday was the low of the week in this case. Yeah, Monday. This was Friday. So this was Monday. Low of the week went up, went up, and went up. Right? Tuesday highs. Wednesday high. Thursday high. Friday came back down and came to 20 to 30% of the range. This is 20 to 30%. Oh, sorry. I had
You're
to
showing
switch.
just the screen or something?
Yeah, yeah. I forgot. I switch. Okay, sorry. So, what I was saying is this is Monday. Okay. You can see at the bottom. I don't know how visibility, but this is Monday. This is Tuesday, Wednesday, Thursday, and then Friday. On Friday, it came back down, and in the afternoon, it rallied a little, but it finally ended up in 20 to 30% of the range.
Mm.
Okay, so if you look at the weekly candle, this is how it will look. I need that other. This, this look. Okay, so this is the weekly candle. I'll add the daily candle also. So Okay. So you can see it has consistently made highs and then it came back down. And this is the weekly candle, which is roughly 20 to 30% of the range. That's where it pretty much closed. Okay. So this is a profile that you can use. So whenever you see that price is moving in one single direction, on Friday, you can expect it to come down. Okay. So this is always something that you can use as a bias and then say, okay, I know that Thursday has gone up. Friday, let's see if it comes back down. So you can trade in the opposite direction. Okay, so that will help you actually do a trade in the opposite direction. Okay, so this is
How
one way.
did you put this particular chart wherein you got?
This one.
Uh,
This is this indicator called higher time frame candles.
oh, it's a paid one, is it?
No, it's free.
Higher time frame candles. Okay.
Yeah. Okay, I use this one for by Friday. There's one more. It's also something, so it doesn't matter. Higher time frame candles. It's also for it's also this thing.
I got the time frame chart overlay.
That's a weekly. That's one. I like this one because it gives me all of them if you want. Like for example, you can do the daily and the weekly and all of them. So it
Yes,
gives
higher
you
time
an idea.
frame
Candles.
candle overlay.
No, not overlay. Just higher time frame candles per party. It's okay. You don't need this because you
Uh,
don't use it right now. It's just something that I'm using for teaching. That's it.
Yeah, for trading.
For training, you don't use it. Meaning there are ways to use it, but that will be a little more advanced. Uh,
Hmm.
so let's look at it when we are ready to look at it. I don't think you guys are ready for that yet. Okay. Okay. So this was it. Okay. So I just wanted to cover the TGIF and nothing. Okay. So let's look at the price action. So now yesterday we were anyway saying that we are going to come down, right? Okay. So now what is going to happen? Uh, this is a now we are actually in a tougher situation, okay, because we have already reached the all-time highs, and like yesterday that we were trying to predict, right? Overall goal somewhere around 6,000. It'll definitely go there, but when will it go is a big question, right? So we need to wait and watch and see what it does. Ideally, like I was saying, we need to come back down. Okay. Okay.
Yeah, because it has already crossed previous month high also.
Yeah. No, this is the all-time high. This is the highest S&P has ever been.
oh,
This is all-time highs. And see, if you look at it here, even this moved on. It came back to the only fair value gap on the 4-hour chart. See if on daily if there is a fair value gap. No, there isn't one. So on daily, this was the only 4-hour value, a 4-hour gap that there was. It came all the way till there and then rejected from here and then went up. Yes. Today's price action. We went through yesterday's price action, right?
mm-hmm.
Let's put midnight. This is midnight. So, okay, so this was the 4-hour gap that was there. Let's start marking the PDRS that we have. This is 1 hour. also 1 hour. This is also 1 hour. Okay. And okay. So now we know that all of these exist. These are the PDRAs, these FPGs that we have. Okay. Then we have one solitary order block here. Early order block location for us to be adding order blocks. No. We just have this order block, which is where price came to and took support. But that happened during the night. You see?
You are on 4 hour?
Yeah.
Hmm.
There's another way to normally mark the value stuff. So normally for order blocks, what you do is you take the open of the order block and you use that to mark it. Okay. Can you see?
Hmm.
Oh.
Okay. So there are two things that you always mark in an order block. You mark that and you mark the mean threshold, okay, which is the midpoint. Okay. So if you look at it, basically this was at midnight. So price essentially came back to the midpoint of the order block and then got stopped. Smaller type it. Okay, came and this H1 FVG was also there. So he essentially took support of that. Okay, I'll remove this now. Because I prefer FVGs as much as possible compared to order blocks. Okay, so now this is hourly. Okay, so this was anyway happening yesterday itself. Once it reached the all-time high, it started coming down, right? And then it started consolidating. I'll go to 5 minutes now. Okay, we have our H1 FVGs here, right? So this is midnight. Okay, so now let us play it through till what time? Till 8 o'clock. Okay, this is 8 o'clock. I'll just let it play through till 8 o'clock. Okay, this all happens in the night, so there's no point looking at it, right? So you're not going to be able to trade this. Stop. Okay, so this is 8 o'clock. Let's assume that you start looking at price here. So what has price done?
It is accumulation, right?
Yeah. So basically just accumulating or consolidating in this area. This was just a manipulation down,
Yeah.
but it manipulated essentially into the hourly fair value gap.
Hmm.
Okay.
Hmm.
So now in terms of targets, if you look at it, now you're here, you come in and then say, okay, now what could be my targets? Okay. I'll go back to 1 hour. Okay. You want to define targets on the higher time frame, right? So your targets are essentially this, which you will not go to, right? Because you already gone there. So, but that's still a possible target. The other possible target is this low here.
Hmm.
So this is your range.
Yeah. So it would play around between those two only.
Yeah. So it is below premium. Maybe. Let's see what happens. But you know that there are these gaps also here.
Hmm.
So it could come down all the way because the larger premium is here. This is the ultimate one, right?
Hmm.
And of this swing is here. One more swing that you can consider is maybe this one. Okay, so we need to see which makes more sense. Okay. Okay. So it's this here, it's below the premium. Here, it's above the premium. So one thing is, since it's above the premium here, and you're still expecting that it could reverse, meaning your bias is now towards the downside, right? So maybe you want to use this. Okay, this larger one is not going to come back all the way here today. So it could. Sometimes it could. Okay. But they badly wanted to push it higher. They don't want to now bring it down without manipulating a little somewhere higher on the higher side.
Hmm.
Okay. So, and they don't, I don't think they'll do it immediately. So maybe our bias should be towards the downside. Okay. So let's go back to 5 minutes now. One more. Okay. So you come here. Now you're looking at your Asia highs, London highs, right? And then what do you see here? These highs are around here. London just took out Asia high, but they're pretty much equal, right? So this will be a magnet for price.
Which one?
These equal highs.
Hmm.
Okay. Any highs are normally a magnet, but when you have so many leathers together, possibly even this one, because it's also close by. So let's use this. Let's see if it
But there are
actually
more
goes up.
highs on the New York AM side, right? Before that.
No, that I don't think it'll go there. This one. This doesn't
Hmm.
matter. This has been taken out already. Only high that
Hmm.
matters is this one, which we already marked out. If it is going higher, then it's quite possible that it can go up to that point.
Hmm.
Okay, if they remain bullish. But we are expecting that it come down at least to this, if not lower. Okay. Now it's already come down here. Now, if you look at it in terms of this is close enough, and or it can come here. This is also close by. So our bias will essentially be one of these two. Okay. So this is 8 o'clock. Now what we want to do is we want to wait for 8:30 to see if there's any manipulation at 8:30. 8:30, I'll mark 8:30 and I'll mark 9:30. Okay. So now let's see what happens. That was it. 3 minute chart. That way we'll see more candles. So this is how you go about marking things up and to be ready. Okay. So then go. Okay. It's coming down. We're not still not taking a trade. You want 8:30 to happen. Want to see what is the manipulation. It is going higher, higher. Okay. It took out London. It took out these equal highs. See? This happened as part of the 8:30 manipulation. So there's a whole thing got manipulated here. And it took this out. Okay. And then it started coming down. Let's see what happens. So if you had taken a trade in this direction, hoping to take this out, you would have been successful. So was there an opportunity to take this trade? Yeah, I guess so.
And you have those three green candles all at once, right? Yeah. Yeah. The mid range. Each
Sure.
bullish calendar, no, on the right hand side, each bullish calendar was
Mm.
closing on top of each.
Yeah, exactly. So this is major bullish sign because you have so many fair value gaps in this going
Yeah,
in this direction,
yeah.
right?
So
So
whenever it closes much above the previous candle, there is a
yeah,
high probability that it
exactly.
will go up.
Yeah, yeah. Okay. So there were Sachin, you're following?
Yeah, okay.
Okay. Okay. So in terms of market structure shift, this was one market structure shift. This was the not really whatever. This was one market structure shift. It's this one. This another. This was one market structure shift. Okay. So if you're taking this trade, you would basically aim for this one. Okay. Stop loss will be here. Okay. You could have taken a trade here. Actually, it was quite difficult, but you could have probably on this candle wick down in this volume imbalance. Can you see the volume imbalance?
But suddenly, when you saw the imbalance there,
Uh,
it would hit your stop loss, right? Like here, like you took bullish, and immediately there was an imbalance, and it came below, right?
this one,
So no, here, like after this three
this
can,
one here,
yeah, no, no, oh yeah,
this one,
here, yeah, yeah,
this candle.
yeah. Over there, you might have already hit your stop loss.
No, why? Because in this case, your stop loss will be here.
Oh, okay. So you should not put your stop loss there.
No, because this is the safest stop loss that you can have. The candle, the swing, they call it the swing low, right? Because this is a
Mm-hmm.
low that is formed here
Hmm.
before the fair value gaps. Because the idea is that once you hit a market structure shift, price can come back down. Okay.
Okay.
So if it comes back down, it can come and revisit any of the fair value gaps.
Okay. So question is,
So it could have come here, it could have come here. Okay. So you need to decide which fair value gap you want to take it in and then wait in that fair value gap. If you're lucky, you get it. If you're not so lucky, then it'll just come here and then just keep going higher.
so then in that case, question is, since
Mm,
we deal with prop accounts and all that, right?
mm,
Let's say it's a 50K
mm,
prop account,
mm,
and you are already at, let's say, 49,500 or something.
mm.
If you take this particular trade, how many points it is? It is with when the candle kind of had imbalance.
Mm.
So you are losing what, 60? No. Yeah, 60, 70 points, correct?
Yeah.
Or it's just 5 points. How much points are we losing?
Wrong one. 5 points.
5 points means how much in terms of dollars?
5 into 10, 50.
Oh, it's only 50.
Mm. So this is the main reason you want to do micros,
Uh,
right? So
Mm-hmm.
$50 loss is still recoverable. If you
yeah.
do a mini, if it goes in the opposite direction,
So
you're
this
going
is
to lose
$500.
$500.
Yeah. Okay.
So
Yeah.
this is the main reason why you want to start with micros.
Okay.
Okay. So then what you can do is you can afford to say, no, no, you know what, first fair value gap, here only I'll take the trade. You can afford to do that,
Yeah.
right? Instead of trying to optimize, say, no, no, let it come here so that my stop loss is very small and I don't lose too much money.
Yeah. Okay.
Okay. So with micros, it makes it easier. So this was one opportunity. This was the other opportunity.
Yeah.
Okay. And then it goes up and your target is this first target. And then if you have taken multiple micros, you can then hold it and see if it will reach this.
Mm.
Okay. I don't know, I have 5 minutes
Let's
till
try
lunch.
to get this London, Asia, and everything. Today I'm looking at maybe this is a different one.
Weekend, right?
Hmm. Let's stick to 3 minutes. We'll have more candles. Okay. So it came here. It already took out Asia and London. So ES took it out. Let's see what happened. Now 8:30. If you came here at 8:30 and then looked at it, it's already taken this out. So this is actually a good sign. Because if it takes out these highs, that means that it's done with the manipulation. Okay, because if you're anyway you are looking to be bearish, then this is a good time to get bearish. See, it's already coming down. Ooh, okay, and this was even before 9:30. Okay, came down already, all the way down. Came to this fair value gap. So this normally when you see Asia and London stay within a range, right? Anyway, this was like essentially accumulation, right, or consolidation profile, right? So normally when you see this kind of a thing happen in Asia and London, you see this, you get into a mode which is called seek and destroy. Okay, what do I mean by
Mm.
that? Seek and destroy is essentially where it just keeps hunting stops up and down and everything. So so the price action will tend to look something like this, where it'll just keep going from um, tops to bottoms, taking everybody out. Okay, so this was the low, went here. Okay, and then it came back down. Okay, came back here, took out this high, came back down, took out this low, went up, created a new low, went up, took out this high that it had taken, has come down. It'll probably, it wants to take this out, this one out. And then probably it'll try, and if it has to go, at some point of time, it'll go like this, in this direction, and take that one out also. So this is typically what you call seek and destroy. Or basically just trying to take out liquidity from everywhere and do enough manipulation in between to make you think that you're going in the other direction, and then go in the opposite direction, take out everybody who had gone short there, then come back down again, take out everybody who are long here, again go up, go down. So this is the kind of profile that normally happens. Okay. During consolidation, this is typically what happens. Okay. See, it came all the way, almost reached this, and then it went back up again. Go back down again, facing some trouble going down. Okay, now we took it out. See, you see that?
Hmm.
We took it out. Yeah. And this happened before New York opened. So what do you think is going to happen when New York opens?
When New York opens, it will go up.
It will go up.
Right. But today, before that, Asia will open, right? Oh,
No.
today. Oh,
Asia
this
is
is
already
not.
done and dusted.
Oh, yeah, here. Okay, okay.
Yeah. So now we are going back up. Okay, it went up here to here. I'll remove this now. Don't need this anymore. Okay, came here, came down again. But see, it went up again. Can you see?
Yeah.
To that point.
Yeah, that's okay. That's came back. There's one more fair value gap here. It went into that. Came back down again. Came down again. Now it's going down. And then it came and took this one out.
Hmm. Now it go down further.
Yeah, no. All it's doing is hunting liquidity. It's
Uh,
manipulating. Okay, this is
okay.
New York.
Uh,
Okay, it came, it realized, people here would have gone long now, assuming it's going to go here
hmm.
again. Okay, went up, took internal liquidity, and then it came back down to take people who are out here. Okay.
For some reason, yes, what Sachin was saying is right. Even I lost the view. Did it update by any chance? I don't know.
What view?
The kill zones.
That is probably because there's something called history, a session drawing limit. Check what is the session drawing limit that you guys have.
Session drawing limit is 30 minutes.
Okay.
Can you hold on for a minute so that I can just...
Where do you get that one? Session drawing limit, kill zones.
You press that gear icon.
So Vinay,
Ah,
can you scroll? Like it is 12 to 12.1, show kill zones. Oh, wait. Show kill zones. Okay. Asia, London, alert, broken. Show
Where do
few
you always have
points.
this?
Everything is there. I don't know why my map does not show. Is there anything which we... Everything is default only, right? You haven't changed anything.
yeah, I haven't changed anything. I just added it, right? I didn't change anything.
For some reason, I cannot see.
Yeah, it's one of these things. Just check.
Okay.
Yeah.
Okay. So then price came back down. Okay, so ideally one trade would have been this one. You basically hold on to this and then hope that it'll come down further. Okay. Assuming you're looking to take this one out. You want to take this one out, but then you have to take a trade. So one way was like you could basically take it here. Okay. The minute you went and took it, you could have just sold here. That would have been a very difficult trade, but because there's this one fair value gap here that you could have tried. Okay, but then that was a very difficult one. Anyway, there are lots of gaps in here and here and here. So it came up to this one. Okay, came down. Okay, further down. Came down. Came. Oh yeah, I forgot to do one more thing. Okay, let's do that also. We have to check the range, right? And the deviation range. 2 and 2.5. Okay, roughly in this range, somewhere here, you will want to see a reversal, right? So which is around this H1 FVG. Okay, let's see if it reverses. Okay, reversal. Came to this fair value gap. See, it came. Now this was a good confluence, right? -2 to -2.5. This swing low, which we had marked earlier. This H1 FVG, which we had marked, right? So this is confluence. Remember we talked about confluence last time? That's it.
Yeah.
So this is what you want to look for. You want to see the confluence like this to be able to have more confidence in the targets. Okay, or where you want to take the reversal from.
The Sanajir, I think, confluence.
Yeah.
Okay. So came. Okay. Okay. Still wants to go lower.
Yeah.
Came. Now okay. The reason why it came lower is because there's a higher time frame fair value gap here. It's more important. Okay, because all of these were lower time frame fair value gaps. Okay, but the fact that there was a higher time frame fair value gap also within the range, that is what it was targeting.
So technically, you would say that higher time frame fair value gap has larger volume sitting inside, right?
Yeah, That is one way of looking at it. Yes.
And in the indicator, if you go, there says that volume candle also shows under premium. Do you see that one? Like if you go to the indicator or candle sign,
Hmm.
yeah, it says volume.
Yeah, but it's okay. That doesn't matter. See, when you use the volume candles, basically Asia and London are all thin because the
Um,
volume is lower normally. The minute you go to New York session, it's bigger because there's more volume.
yeah,
So
but
I
if you look at
personally,
the fair value gap, higher
it
value fair
doesn't
value
matter.
gap,
It
it
doesn't
doesn't
matter.
matter.
It doesn't matter.
Uh,
It doesn't matter. Okay, so that's why I just used the normal candles. Even I thought it might help, but it didn't really matter. Okay,
uh,
okay. So it came targeted this higher time frame fair value gap. Okay, and you see, I had marked this one also out also. Now, if you want to, if you take a look here also, right? Another important thing that you need to look at. This was a consolidation. Can you see?
Yeah.
I'm gonna turn off the skills on. We don't need to tell you. This also. Yeah. So this was a consolidation, and just below that you had the uh,
fair
H4
value.
4 hour fair value gap.
Hmm.
Okay. So that means that this is another reason why price will probably revisit this area because this is where orders are. Every time there's a consolidation, this is when lot of orders get placed. So what happens is I'll just move through timelines, time frames. Just watch this area. Just see what happens to this area. 15 minutes. Okay, this is 15 minutes, 1 hour. See, order block. This became an order block. Anyway, on 4 hour it became a FVG. Daily there won't be anything. So consolidation areas are the areas where order blocks are essentially formed. So most of the order blocks, if you look at it, right, if you go to a low enough time frame, you'll see that it's because there was a consolidation there. Okay,
Hmm.
it is interesting. Okay. So, um, okay, so it price came here, 4 hour fair value gap. Okay, this is a major area, right? So now you can expect a reversal here. There's nothing else below, right? That we saw. There are all smaller time frame, 5 minute fair value gaps here, but higher time frame fair value gap, there wasn't anything. This was the last one. Okay, so you can expect something to happen here. See, now price is going back higher. Now guess where is it going to go? Hmm?
Hmm. Where is that point? It'll go cross, right? Should go up.
Yeah, and you go all the way and take this out. That's came back down to manipulate people saying I'm going down again. Went and took it out. See? One of those of this. This is end of the day. Yeah. So what did it do? All it did was take this out. That's all it did. So, so now you understand what I mean by seek and destroy, right? I just took every high and low that it found. It'll try and manipulate, then take that out, do some more manipulation, then take the other one out. And all of this was to basically try and take this one out.
So when you say try and take the, if I understand when you try go down, you there are some residual orders, you try to take it out, suck it out.
Mm, mm.
When you go up, what orders you're trying to get the sell orders to take it out?
Because, yeah, because people would have gone short here. Or every top has sell stops,
Mm,
right? They have sold off here. They've sold here. Where are they going to put their stop losses? They'll put it a little above this, right? Or if they sold it, like, for example, right? I told you here, if you had to take a trade here, I told you the stop loss needs to be at the bottom of this candle. You have taken the trade here. You
mm,
entered into the trade here, but the stop loss is at the bottom of the candle here,
right.
right? So exactly the same thing. Look at it the other way around. People have taken the trade
Mm,
somewhere here. They put their stop loss here. They put the stop loss here,
mm,
here, here. All you want to do is go and take all of them off. That's all you're doing. Okay. Then once you took that out, it then came back inside the range, and then the stop. Okay. So this is
is it-
seek and destroy. Okay. So this is something
mm,
that typically happens whenever there's been a large range day, right? So that because like since NFP and FOMC, it has just kept going higher and higher and higher. So they need to take a breather. So this is what they end up doing. They come here, they do some consolidation. The minute you see the consolidation, you know that it's going to be a seek and destroy, behavior. So that means every high and low that is there, it will get taken out. And in between, they'll do a lot of manipulation to make sure that it's not that easy to trade that. But this was actually very tradable because there was a decent range.
mm,
Yeah. So I traded this range here. This range actually wait. I'll tell you what I traded. I traded this to this. I traded.
sell.
I traded this one to this. I wasn't sure if it'll go down further, so I just took my profit here somewhere here.
Mm,
Yeah, because I initially I wanted to target this, but then I chickened out. So wait, did I do that or probably I don't think so. Either did that or I did no, yeah, no, I did this. This is what I traded.
yeah.
Somewhere around here to here I traded it. Okay. Just roughly around 10 points or something, if I remember right. Yeah, somewhere around here. I think this is what I kind of traded. Okay, so to basically take out this one, right? So that is no this one. To take this one out, that's what I traded. And then I think I held a little more, and then minute it hit this H1 FEG, I think I exited. The reason I ended up exiting is because I didn't do this. I didn't do the deviation. I forgot to do it. I looked at it later, and I realized it went all the way down. Then I was trying to figure out why did it go all the way down, and then I was trying to do. Then I realized all of this was there. This was here. So this is what I was trying to trade towards. I didn't want it to reverse before that happened, so I just exited.
Mm,
And this I didn't figure out. Because H4 FPG I didn't. I was playing around with hourly FPGs, and then I was hoping that one of these will work out. But decent range today. In the afternoon also I took one trade. I think I traded this to somewhere in this range, this one in here. Took a few trades here somewhere. Afternoon I kind of something like this I did. the 10 points. I didn't want to hold it to move like this. These two trades worked out for me today. So
Good.
it wasn't a lot. My problem is I because I'm trading only one contract, so I can't hold my trade for longer because I get scared that if it starts reversing from here and then I'll lose money. So the first
Mm.
target that I meet, I end up taking out the trade.
Mm.
So it becomes actually difficult to hold because if something like this happens, I don't have the confidence to hold till here. So
Mm.
if you're
So you always
really
take sell orders, huh? You don't take buy orders.
no, I don't go. This was a buy order.
Oh, it
This
went
was
up,
a
huh?
buy. This was a sell. This was a
Mm.
sell. This was a buy.
You waited till that point, or you waited till this point?
I waited till here.
Uh,
I
but
waited
even
till
though
here.
that high point was
So
there.
yeah. So when this came back here down into this fair value gap,
Um,
this fair value gap, it came here and then went up, right? And then somewhere
mm,
around here, by the time I pressed the button, I think I took it somewhere around here.
mm.
And then
I
I
debated
just
it.
and then
Still a
I
long
yeah
runway.
yeah because I wasn't sure what it was going to do because there was a fair value gap here also.
Uh,
So and I knew this should ideally be the target, but it was the last hour, and this was in the 20 to 30% range. So I wasn't sure if it's going to
mm,
go there or here only it'll just like basically just consolidate around here. So
mm,
this was just one trade. I thought, okay, let me try, and then I took it. So the minute it reached this, I took it off. So this was the price action. So actually, it was quite tradable today compared to the last
mm,
few days. It was actually a lot more easier to trade. Uh, it wasn't that tricky, even though there was a lot of seek and destroy and it kept manipulating back and forth. But if you look at it, it pretty much all the PDRAs that you normally would use to take a proper trade, it kind of held. It came, for example, it came to the 4 hour pair value gap, held it, then went up. So this was a very clean reversal. And this also happened on time. 11:15 is when it happened, macro time. And even the timings, if you look at it, it was 8:45, 9:30 open, right? So if you had put your limit order here, expecting that 9:30 open will, take it out, will take it and go down, then you had a trade here to just take this out. So that's essentially what I did. And then you could have just taken it down here till here and then
mm,
exited. The other trade was this, but then you had to have the bias that it was going to go to this one. I didn't have that bias, so I didn't take that. So this also see at 10:30. This was 10:30. This was at 10:10. End of macro.
mm,
This is 11:10 down 15. Even if you look at the timings, right, it's like perfect. 11:50 macro went up higher. Finished at 13:30. 1:30 it finished. It actually pretty much reached there in the 12:50 macro. Reached this fair value gap because the target. It's time for that target. And then came down. And this was 2:30 approximately. Then went up. This was 3:05. So this was like during the 3 o'clock macro, 3 p.m. macro came here. So the thing is, during the macro times, if you see something like this, then there's higher probability of you for you to take the trade. And then when it goes up, then it becomes a lot more easier. You just have to have the courage to hold it till the target.
mm.
That is the difficult part.
Yeah, that's the most difficult part. Having because you have to be very sure about the target. And this is where you need a lot of experience, and you need to somehow at least a few times have to have the courage to just say no, I will hold. And hopefully, if that happens 10 or 15 times, then you know that you have a chance. So you can at least do it. The other problem that I have is I keep moving my stop loss the minute it goes green. And then I think somewhere here or somewhere, I don't know which trade. Here, actually, I took two trades. It went up and then it came back down again somewhere. So this one, I think this candle, I moved my stop loss. I came to got my stop loss, and then I entered the trade again, and then again it went up, and I hit that. But thankfully, both were green, so it added up.
Okay. Good, good.
Okay, so this was this is price action. So, but now do you see the concepts coming through?
Yeah.
Now
Yeah.
you are able to at least relate to it, right?
Yeah.
Everything that we talked about.
And
Not every, meaning, but at least the bigger, major ones. Now you start seeing it in the charts. Now it's easy to go back to the slides, and then when you look at it and say, so this is what it means. So, so that is the part that you guys will have to put effort on now.
mm,
And then when you actually start trying to use this concept to trade, that is where you'll have the most learning.
I want to start doing that.
Mm. Start doing that, but do it like I said with micros, so that you
Mm,
don't blow up your account. Or what you can also do is if uh, you can even in NinjaTrader you can actually have a simulation account. You can use a simulation account to actually do this. So that way you're not even risking your evaluation account. But still,
uh,
but losing money is important because only when you lose money you start feeling the pain. Even if it's fake
pain,
money, but it feels real when you lose it.
only gain after pain. Huh?
Yeah. But just remember the steps that I took. Meaning, some of the, like for example, even I keep forgetting lots of times doing this standard deviation to have an idea of the target, and
Mm,
then this will probably give more confidence. Meaning that is something that today I realized that I don't do. So if I do this, then it becomes a little more. I get a little more confidence about what the target could be. So
mm,
doing something like this, meaning I wouldn't have been. I don't think this I would have been able to guess, but then that would have been an outside chance. So I could have like taken this and then you know. But seeing this retracement, I would have chickened out. I would have gotten out of the trade. I would have taken the trade only till here. I'm sure. I wouldn't have been able to hold it back here. I don't have that confidence yet.
mm,
But the thing is, you have to get used to it. You have to see this many times. With a micro, meaning if you manage to get the trade at the right level, right, and it's still green, you can still say, you know what, let me hold it and
mm,
let's see what happens. And then you actually end up getting more.
mm,
And that's happened to me so many times, but that is one lesson which is very difficult to, uh, you know, do. Um, because I keep moving my stop loss. For example, if I bought it here, I would move the stop loss here. Then I would move it here. See, the minute I move it here, I would get stopped out. Then I'll feel bad that I had so much more profit and I lost everything. So
mm,
what I will end up doing if I see such a big candle, I'll just exit the trade.
in that point.
Yeah, at that point,
Mm,
I'll get scared and think. So that is the psychological part which I'm not yet able to master because the confidence isn't there to be able to hold it till here and then watch it go back down here. So ideally, what you want is go just goes all the way here. This is your target. Fine, just take it out. That'll be perfect. Then there's no drawdown that you have to worry about.
Hmm. So really, if once you're done, like, you can do the setup right now, or when I can